Hey traders, today we're going to talk about a pivot point and stochastic combination. So the pivot points are a popular indicator that are built just by taking the high, low, midpoint of yesterday's range, doing some mathematics to add them together and subtract them from each other to put a bunch of lines on the chart. I'll show them all here. We count them as 1, stop 2, stop 3, stop 4, stop 5, and then resistance 1, 2, 3, 4, and 5. I guess support. Just a way to measure support and resistance. That's based on, I don't know if you can tell, but like this line is the close plus the low or something like that, and then that sort of stuff. I don't really use it myself. However, a lot of people do. And they're more for longer term traders, people who are looking for better places to take longer term positions intraday. However, they're also used for day trading, swing trading, and everything else by people, so let's talk a little bit about them. So one way you can use the pivot points with another indicator to scalp or trade intraday is to combine with them a stochastic. I went together and built a quick little stochastic strategy and went ahead and threw it up on the chart here to help us look at the pivot points and see if we can use that in the stochastic to assist us in any way. And you can see it's actually fairly simple. We can just look to use the pivots as stops or supports or resistances of sorts and wait for the stochastic to confirm momentum, and then that can give us some decent trades. If you're using one stochastic to enter, I prefer to use a separate stochastic to exit, just to work off the fractals, but this will work for us here. Like for instance, if I was going to enter on this one, I might skip that one and go to the next one. That sort of idea. But I would be using different kinds of combinations to do that more subjectively. So you can see they do a solid job of finding longer term positions. Like what a lot of traders will do, especially larger traders, is when they're looking to enter the day, they have things they're looking to sell and they have things they're looking to buy to balance out their portfolio, is either delta or their share balances, and they will often use the pivot points as good areas for them to do their long-term work. Like say I came into today and I had a bunch of call spreads to roll and then a bunch of put calendars I wanted to roll as well. Well, I'd probably roll some calls up there, then you wait for it to come down here towards one of the supports, and that's where you start rolling your short sides. And it's kind of that idea. That's how they're traditionally used by larger players. What a lot of retail uses them as well to do sort of this sort of stuff, is they know the larger players are going to be interacting with price at those levels. So it's sort of minnows biting on the big fish. And some people have great success with it. Some people have a lot of faith in pivot points and support and resistance and stuff like that. I find them a little not super objective because there's a lot of wiggle room around there. They're hard to use as a definitive stop or something like that. So I like to think of them more as a guideline than anything else. But still, you can do something with it. Depending on your use of stochastics and your risk management and everything else, it could be a viable strategy. If we just look at the base stochastic, all of them, it's not very great. But we can go around and let's mess with the stochastic a little bit, see if we can make it better. So it's going to be hard to modify this, or hard to run a back test on this, so what I did is I just modified this instead to be a stochastic inside a stochastic. So basically a trend inside a trend, it's probably the best I can do. So basically it's going to be weeding out a lot of these. And you might even want to run it, I don't even want to run it like that. So I have this super smoothed out, right? This is going to be downtrends, this is going to be uptrends. In big old uptrends, you want to try longs over shorts. And then when it gets into downtrends, you want to try shorts. And that way you're trading on the right side of trend and helping it progress. There are definitely areas where it gets a little choppy. You have some nice ones in there. And you might want to be a little bit loosey-goosey with your exits. Try to hold it into trend as long as possible, right? But it's workable. I mean, it would be a tough one. I don't really like the pivot points myself. Use those to confirm trend. Like you can see here, it crosses under this pivot point, crosses under this trend here. Like maybe it's trending down from this pivot point. Yeah, it chomps up around it a couple times and crosses it like probably 6 times in there. But eventually does trade down and continue trend to this last pivot point here. And that's this pivot point down here is where trend stops. And I mean it does, again, it chops back and forth across that line probably a dozen times, maybe more. But it eventually does come up off that line. And then it comes back down. But you know what I mean. Anyways, I hope this was educational for you. I hope you learned something about trading and investing, technical analysis, and charting. And make sure to leave any questions in the comments. Be happy to get back to them for you. And if you like this and you like other content like it, make sure to subscribe to my channel. Thank you. Have a great night.